Hi everybody. In the last video, we practiced writing journal entries for business transactions that took place during the months of August through December, X1. In this video, we'll write adjusting journal entries on December 31st, X1 for the same company. So this video is a continuation of the practice video number 6 that we just completed a few minutes ago. We will refer frequently to the adjusting journal entries that you wrote in that exercise. So please download and print the PDF version of this adjusting journal entry exercise, or you can download the Excel version so that you can practice writing adjusting journal entries as you watch the video. But also, please have available the journal entries that you wrote for this company in the last video. You're given a chart of accounts again. It is the same chart of accounts that you had when you wrote the journal entries for this company. The instructions. Always read the instructions. They really are helpful. This company does not make monthly journal entries. It is now December 31st, X1, and the company must make all adjusting entries required for the year ended December 31st, X1. And again, follow the same example where you write the account number rather than the account title. Always write debits first, credits last. Number 1, prepare an adjusting entry with respect to the rent that was prepaid on August 1st, 20X1. Well, you need to go back to the original transaction on the journal entries that you wrote. August 1st, we prepaid $7,200 for 12 months rent on the office space. So now we can come back here and do some calculations. We can work this one together, then I'll turn you loose on the other ones. $7,200 divided by 12 months equals $600 per month. Of rent expense times how many months since the original transaction happened. It happened on August 1st, so there's all of August, September, October, November, December. There are 5 months that we have to write expense for 5 months. So times 5 equals $3,000 of rent expense that needs to be recorded for the 5 months ended December 31st. Now that you have that calculation, go ahead and write the adjusting journal entry. Debit rent expense, account 655 for $3,000. And credit prepaid rent, account 128 for $3,000. Remember the original transaction. You had debited prepaid rent. Now 5 of the 12 months has expired, so we have to credit prepaid rent for $3,000, the 5 months worth of rent. Prepare an adjusting entry to record depreciation on the equipment that was purchased on September 1st. Looking at the original transaction, we don't depreciate supplies, so don't even look at supplies. It's the equipment, $6,300 worth of equipment. Doesn't say anything about salvage value, and the expected useful life is 7 years. 7 times 12 is 84 months. So go ahead and do the calculations for straight line depreciation, get your depreciation expense per month, then multiply it times the number of months that have expired between September 1st and December 31st. Do your calculation right here, and then write your adjusting entry. A $6,300 cost minus 0 salvage value divided by 84 months equals $75 of depreciation expense per month times September, October, November, December, 4 months equals $300 of depreciation expense for the year ended 12/31/X1. Debit account 605, depreciation expense dash equipment, and credit account 168, accumulated depreciation expense dash equipment for $300. Did you get it? An inventory of supplies was taken on December 31st, X1, and it shows $200 of supplies on hand. And there's a hint. No supplies were purchased during the year except those purchased on September 1st. So let's go back and look at September 1st transaction. On September 1st, we bought $1,500 worth of supplies. So our unadjusted balance of supplies at December 31st was $1,500. Calculate the amount of supplies used and record the adjusting journal entry. So $1,500 of supplies that were purchased on September 1st minus the $200 of supplies on hand at December 31st equals $1,300 of supplies used between September 1st and December 31st. The expense is always the amount of supplies that were used. So debit supplies expense, account 640, $1,300, and credit the asset account supplies, account number 126 for $1,300. Discovered that we had performed $2,000 worth of the work for which EGF client, or EFG client, had paid us in advance on November 18th. Let's go take a look at that original transaction. November 18th, we received $2,400 from a client for work that will be performed later, and we credited unearned revenue for $2,400. Now, the client, we have actually performed $2,000 of that work. So we get to reduce our liability and increase the amount of revenue that we earned. Go ahead and write your adjusting entry. Debit account 236, unearned revenue for $2,000, and credit the earned revenue account, which is account 403, consulting revenue, for $2,000. Isn't this fun? I'll tell you what, though. It's getting to the point where I could use a break, and I think you might be able to use a break. So let's take a bonus break. I will award 5 bonus points to the first, let's say 20 students who submit a picture of a goldfish before Sunday at 11:59 p.m. That would be before Sunday September 27th at 11:59 p.m. So submit a picture of a goldfish in an email or a Canvas message to me, and the first 20 students will get awarded 5 bonus points. Make it a pretty fish. I like to see pretty goldfish. Okay, let's go back to work. Employees who worked for us during the last week in December were not paid until January 4th, X1. There are 5 unpaid work days in December, and there are 10 employees who worked full-time in December. Each employee earns $300 a day. Calculate how much wages were earned by those employees that have not been paid to them yet, and then write your adjusting entry to accrue the wages expense and the wages payable. Did you calculate $15,000? That calculation is 5 unpaid days times 10 employees who each earned $300 per day. So 5 times 10 times 300 equals $15,000 of wages that are owed to our employees. So debit account 622 salaries expense, $15,000, and credit account 221 wages payable for $15,000. Pretty good problem, huh? And our last adjusting entry for the month is we completed $7,000 job on December 31st, but the bill was not sent to the client until January 5th, 20X2. Accordingly, this job was not recorded on the books in 20X1. Prepare the adjusting journal entry to accrue this revenue at December 31st, X1. The journal entry to accrue the $7,000 revenue that we earned in X1 but has not yet been recorded in X1 is debit accounts receivable, account number 106 for $7,000, and credit account 403 consulting revenue for $7,000. Well, that's all for these journal entries. Let me know if you have questions about anything in chapters 1, 2, and 3 as you prepare for the exam. Send me a message, and I'll see if I can get back to you on that. The exam will open up on Friday evening, 11:59 p.m., and will close on Sunday evening at 11:59 p.m. You will have a 2-hour window to take the exam, and there are exam instructions in Canvas announcements. See you later.